Good day everyone and welcome to Wednesday live trading session. Today, March 15, Fed decision. We need to be very careful about trading. We might see a few setups now and I advise you to either close or keep the risk low. Uh, if we get into a trade before Fed, the chance is that we might get trapped. Okay, because as you can see, market has been very volatile. It's been range most of the day, range play on different pairs, and there is no very clear trend. So really, guys, please be very careful how you trade, because today it's a big day. Fed is supposed to hike, so what we don't know is if there is already well, let's say that if the price has already been priced in the market. Now what I will do, guys, I will make a low risk trade. Probably I'm waiting for this Australian dollar and we'll make for a low risk trade, but and I will put my stop loss, okay, and let's see what will happen. But this should be a market order. It's not too late. Of course, Diliana is asking, is it too late for Australian dollar? I don't think it's too late. I will put a very low risk, guys, here. Okay, this is my low risk trade. Okay, I know it's Fed, but we can keep it low risk. Okay, this is sell. I am selling now Australian dollar. Okay, the thing is, guys, as I say, it's a bit nasty. I don't like particularly to trade before FOMC or before any Fed decision or any major decision, but definitely this is what now I'm trying to do. It's a low risk because I see that well, definitely it's a bit of I can say well, Australian dollar is in downtrend, so that is market order. Okay, uh, we need to leave pending orders for after Fed. Okay, so yes, guys, this is what I do. Okay, you can see okay, and my stop loss will be 7,550 plus spread. Let's say it's well, this is a low spread, so I might say 7,553, although I calculated the risk for 7,550, but it more or less is the same. Take profit, I will aim for 7,450. I don't know, really. This is as I say, guys, you don't need to do this. Okay, this is a risky thing. Okay, just because Fed, but let's see, a low account, of course, guys, and very low risk, so you definitely can try to do it, guys. If you're trading with low risk, you should always be safe. How I do, a lot of people ask me what I do if I have account that is higher than 50k. Yes, guys, as I already told you, I managed to bring the account from 50k to 63, 64k. Okay, and the thing is that I stopped trading that account. Now I can I am focused on low accounts and low to high to build up, because I made my yearly profit. Okay, and that is mostly by trading our session recap trades. That is when I made most of the profit. So really, guys, that is what I'm saying. Okay, keep the risk low and enjoy this market. Forex is beautiful thing to trade, guys. Okay, I will give you other setups, of course. This is market order now. You can see it's market order. Let me see if I have it written down on PPT. Excellent, here it is. Okay, and before we begin, guys, risk disclaimer stating all possible risks associated with Forex market. You must be clear that this is not Admiral Market advice. I am responsible for my account and this is solely my responsibility. You need to read the full risk disclaimer and to decide that you will proceed further with me. Okay, CFD and Forex trading are leveraged products and can result in losses that exceed your deposits, and because of that, they're not suitable for everyone. Please ensure that you fully understand the risk of trading Forex market. This video is not part of the .uk website, but the globalnews.com website. And rules and setups, guys. Okay, I needed to show you Australian dollar before this just because, well, you see, I did market order, so well, basically, if I hadn't done market order, then I would have probably told you this a little bit before, but well. Okay, rules and setups. We use POC zones, master candle setups, wolf waves, price action. This is risky to use, especially wolf waves, when market is ranging. Now, Fed decision will be probably to rate hikes. Guys, if they don't rate hikes, I would be really very surprised. Not surprised, but very surprised, because everyone is counting that the Fed will actually hike the rates. So we need to go with the flow. I personally think also that Fed might hike the rate, and probably if you read my analysis yesterday on forex3.com and on Admiral Markets, you know that, guys, this is what I think. Okay, Mario, this can be the answer to your question. This is what I said, guys. The US Federal Reserve Bank has battled to ignite inflation since the GFC. GFC is short of global financial crisis, and up until now it has raised rates less frequently than the markets have expected. However, this approach may soon change. Why I think so? Now, okay, I mean, everyone thinks the same, probably, guys, but my personal opinion is really, okay, this is, we have strong NFP. We have full employment, guys. In economy, when you see that the employment is at or less than 5% unemployment, it means that it's full employment. Okay, it's the economy, pure economy. So now I'm teaching you some stuff that you might, well, you know, it can be useful to you, right? So we have also an uptick in inflation. As inflation is showing signs of revival, not only the US, but also in Europe, the Fed could signal more than 3 rate raises as they have forecast for this year. Well, guys, probably we will see 3, well, maybe even more, okay, at this point. And this is very important. If the Fed does not raise rates in the March FOMC meeting, it will surprise financial markets and potentially damage the Fed's credibility. Well, if this happens, guys, I would be very, very surprised if we don't see a rate hike today. And, well, this should bring about some further renewed strength in the dollar, and potentially this could shift some funds from equities and commodities into fixed income. It's also important, guys, to know. This could be the shift from equities and commodities into fixed income, okay? So, well, let's pay attention to what is happening, and we need to go with the flow, guys, okay? Definitely go with the flow. Now at this point, guys, as you can see, why I shorted Australian dollar. Okay, it's clear why I shorted it. Honestly, guys, this looks like a rooftop to me. Okay, this region here. Okay, I will mark it down. Stop loss for this trade is 0.7653. Okay, my entry was 75.96. 76.53 is stop loss. Low risk trade, guys. Always trade with a low risk. You don't need really to try to go with a full risk, especially with Fed looming. Okay, guys, you need to understand that when I trade, I prefer this low risk trades, really. So let's see what will happen. This is market order. This is it looks like head and shoulders, but what did I teach you? When we see head and shoulders at the top, it might be a rooftop pattern. Okay, so this is rooftop here. Okay, from this part to this part, guys. Okay, this is a rooftop and you have double bottom here. Okay, you see, you have double bottom here. So this started to drop, okay, and also it was A, B, C, D bullish, that was successful, making 1, 2, 3 days of good price action, then retracement. Now guys, this is bullish price action, but we use bullish price action on lower time frame. Okay, this is, let's say, 4 hour, but if you take a look at daily time frame, okay, watch this, guys. Huge drop, then correction. Now this is downtrend. And even on weekly time frame, guys, okay, you see weekly has been rejecting from this top, making this W unsuccessful. We might assume that this is retracement. Oh, you don't see the screen. Sorry, guys. Sorry. Okay, now you should see the screen. Okay, this is rooftop, you see? I will make this even better now. Okay, this is rooftop. Okay, so now you see the screen. Yes, it was frozen. So 4 hour is bearish, guys. Okay, but we have intraday bullish price action. Watch this. These boxes, you know, I already given you boxes. If you don't have it, you can always ask for it. It's free, of course, guys. So you can see here, these boxes tell me that this is correction. 4 hours in downtrend. Every single time frame now is in downtrend. Here, guys, on weekly, what I was trying to tell you, you can see weekly time frame. Failed W bullish pattern. So I would go with this 4 hour, and I'm in this trade, although I don't know what to expect, because I think that it's always like that. Fed now is, market is waiting for Fed decision. Price will probably range, giving me 10 pips of profit and 10 pips in drawdown. So, you know, I think that I would be surprised if my trade goes directly to the downside at this point. Really, I would be surprised. But, well, you never know. I mean, trading is like that. You open the trade and you hope for the best. But the main thing with trading, guys, you don't need to sweat. You don't need to be afraid of trading. You don't need to be emotional. I am emotional when I speak to you because I want you to teach you the best. But when I open the trade, I'm not emotional. Really, guys, I open the trade now. I have my stop loss. I have my risk there. Okay, I have my TP really here. So, well, let's wait. I mean, you know, guys, it goes like that. They don't trace slippage. Dado, please use volatility protection settings in your trader's room if you're afraid of that. So whatever happens, you might use volatility protection settings. Okay, just log into your trader room and use volatility protection settings. So far, I haven't encountered a slippage here. So, but you know, guys, I mean, you can. Of course, this is ECN account, so it's a little bit different. It's pretty much spreads are very, very low. You see here, but well, it's always advised to use volatility protection settings if you are afraid, of course, to trade during FOMC. Paul is asking, will you hold this trade through Fed decision? Good question. If I am in profit, Paul, I would protect my profit. So let's say that before the Fed decision, I am like 15, 20 pips in profit. Let's say at least 20 pips. I would probably, I think I would probably, because it's nonsense. I mean, we cannot close the half of 0.10 lots. I would take my profits. Okay. But if I'm in a loss, let's say if the price goes up, it's close to my stop loss and what I know, then I would cling on a trade, okay? Because, guys, it's low risk trade. I really don't need, I'm not afraid of this, really. So, you know, I mean, if I'm profit, I will protect my profit, take the profit. If you opened a trade, you can scale out also, taking the half out, put the rest to break even. But I think I will definitely take the profit and see what the Fed will come with. If I am in a good profit, let's say if the price is really dropping a lot, and Fed decision kicks in and I see that the price is dropping, then I would definitely take all the profits, okay? But let's see, if I'm in a loss, in a drawdown, I will keep it. I will not close before it hits stop loss, guys. I really will not be doing that. So this is rooftop head and shoulders. I personally prefer to short somewhere from the top of the shoulders. So this could be good to short into originally, okay? This could have been, okay? You see here, head and shoulders, left shoulder, head, right shoulder, corresponds to ABCD bullish. And these boxes, this is downtrend, guys. You see, this is high, this is low, lower high, lower low, lower high, lower low. So this could be a lower high. This is just a mini move. This could be a lower high, and let's see if it will make a lower low. But as I say, the only thing that I don't like is that market is not moving now because of Fed decision, probable rate hike. So it might be that rate hike is already priced in, and that is what, you know, guys, that can be risky, of course, to trade if you don't know what you are doing, of course. Okay, so, you know, as I'm telling you, when you make nice profits, let's say on some bigger, okay, things, then on some bigger accounts, then you need to close it, definitely, okay, because my advice is to open that lower risk account and try to build it up. It's good you have the ability to use the leverage, guys, and if you use the leverage properly, it should give you nice profits, guys, okay? So I always say some of my accounts, okay, here it is, guys. You can see when you make some nice profits on one of your accounts, okay, you can always hope that it will be for the best, and you can actually try to scalp with some lower accounts or make intraday trades with lower accounts. Next trade that I want to show you guys is, okay, yeah, someone is asking me, will we what about Friday? Guys, these setups are valid for today, except for few setups that I will give you. They are valid not just for 2 days, but I have this pending orders. So I will update on Twitter if I remove those pending orders, okay? So this is still the opportunity, okay? Someone also asked me about dollar yen. This is my dollar yen opportunity. I will hold after Fed. So whatever happens with Fed, this will be my trade. If it drops to 113.50, well, I will buy it. I don't know. I don't think it might, but you know, you never know with Fed decision. If they don't hike, then definitely it might drop. But still, guys, dollar yen is very bullish, and I have a big margin here for a stop loss. Very, very low risk trade, guys, and here 118.00, definitely I'm aiming for that if it happens, but let's see if this will happen. The trade is one of we can call it swing trades, okay? Swing trades that can last for a couple of months, okay? And the main thing here is that you actually should be relaxed, because this is not a scalp trade. You don't want to take 20, 50. When it comes to, let's say, 100, 200 pips of profit, then you can think about protecting your trade. But you see, now I will show you again. Okay, so just give me a few seconds, guys. Okay, okay, so it's still the same, okay? It's, if it drops we can buy it, okay. 200 pips stop loss, big stop loss, but you can keep low risk within the stop loss, and target can be almost 500 pips, okay. Target can be 500 pips here. Dollar yen, this is hourly trade. Why am I showing you hourly trade? Because guys, do you remember what I have been teaching you? Do you remember? Now tell me, do you remember master candle? Famous master candle. Now if you followed my price action trading school, okay, you know that you can trade master candle, guys. I'm speaking to my students and to people who already know what master candle is. If you don't know, if you're watching these recordings from YouTube, please, okay, please read about master candle. This is master candle. That was good. Okay, you see, master candle, yes, for the win. Hasselhoff is saying, okay, this is the candle. Oh, this is great candle. Watch this. I like these kind of candles. And watch this. 1, 2, 3, 4. 4 candles. Confirm the master candle. This was the sell entry there. Stop loss, well, either above this level or this level. What happened? You would have been in profit. Not bad for ranging market, 22 pips. So master candle setup, breakout of master candle, okay. Now the price is getting into the range of this master candle again, and it tells me that market is really bullish here, okay, and it might really, well, I think it might just be bought on dips again. But on higher picture, this is the trade, guys, that you should be very buy limit where, let me just colors, I need to switch colors, volumes, okay, ask lines, stop levels, everything here. Okay, so you see buy limit, guys. This is 4-hour time frame, okay. You see 4-hour time frame, very bullish. This is ABCD, although there is no indicator here, but ABCD now it's rejecting, but it can also be W if it spikes. So if something happens and it drops, I will be buying it. You see, I will be buying it. Okay, now let's see what happens with my Australian dollar trade. It's 6 pips in profit now, you see. And also, guys, don't forget CCI indicator. CCI indicator tells you that the market is either overbought and oversold, okay. You see CCI indicator here. The market is overbought in downtrend. So when you want to short the price in downtrend, market should be also overbought. And here we have a confluence, guys. I can put Fibonacci here from this spot to this spot, okay, and you see that it's 78.6, it's ATR pivot point, it's very close to H4, it's a rounded number. I prefer to buy and sell close to these round numbers also, because round numbers are used also by institutional traders. They like to use 0, 0, 50 and occasionally 20s, but 0, 0 and 50 is actually a rounded number, but we can say it's also a round number like 0, 0 and 50. So you can see here, okay, a lot of confluence there. That is why I sold it. And also the market is overbought here, okay. You see the market is overbought. Yes, these are quadrants, Riasat indeed. If you remember my price action training school, that was the first lesson when I was teaching you about quadrants. Here, guys, you see all these boxes are marking whether the day was bullish or bearish. This is correction, okay, here, because the day is bullish in downtrend. Price is overbought in in downtrend. We have a fib number, we have confluence, so this is POC zone. That is why I'm selling Australian dollar here. Also guys, these quadrants, you will easily see highs and lows. So this is high, this is low for the day. So selling it close to the high of this day, close to the high of this day, close to the high of this day. Guys, I mean really, what can we learn more than this? Really, we already have been going through price action training school. You can find the recordings on Admiral Markets YouTube channel on the internet. So you can see, I mean, as I trade, I like to trade this price action. I have learned things that money management particularly is the holy grail of trading, but you really know where to put your entries, stops, and so on. So let's see what will happen. Okay, so Australian dollar is in the trade. And one more thing, guys. Yeah, this is swing, of course. This short-term buy is not valid anymore, so we can remove it. So just this one is valid, as you could see from my screen. But guys, this is what now, as I say, I would look again to sell euro dollar. If you followed my session recaps, okay, if you follow my session recap, you know that I was also selling euro dollar from 1.0670, and also it was I published the analysis today, so you can read my analysis, which levels to watch. Okay, I will show you right now. Analytics, technical analysis. Here, guys, on our analytical section, very clear analysis. Very clear. So if you ask what POC zone is where you place your entries, guys. I mean, POC zone is the zone where we put our orders. What I'm trying to do is maybe in the near future, I would like that Admiral Markets make another tab here, so new traders could actually learn what my Camarilla means, what these levels mean, what POC zone is, so it will be also easier for, let's say, new traders to trade. Although I know that a lot of traders, because I always have a big number of people here on my webinars, I know that many of you are new traders, but still that would be good that you, if you don't know what POC is, that it should be also written. POC zone is where we place buy and sells. Okay, it's very easy to understand. You see, so that is why I would probably look to sell around 0.670. I'm careful just because market is not moving now. It's very slow, but I would pay attention to Fed and see if we can sell it from here, or we can sell it just before this level breaks to the upside. This is what you should be watching for. This is daily Camarilla, where you see D, H5, H4, H3. It's daily Camarilla. Okay. This is weekly Camarilla. Okay. So this is dominant trend range on weekly. H3 to L5 is the dominant range. Market is now currently below H4. What I expect, if H4 is broken, we might see H5 and then we can sell it. Until then, it should move lower. And MACD also is bearish. It's below zero line. So you see this is inner trend line here. Inner trend line is intersecting H5 Camarilla daily pivot, so we can call this as an X cross. X cross is also here on H3. That is why you can see now moment rejections from 0.623, because when trend line intersects these levels, this is weekly L3 and daily H3, it makes for a confluence, and this level is also respected. That is why you see rejections from this level in now moment. But when volatility kicks in, it will be either up or down. Here I would look to sell, but also, guys, you can read my analysis here, but also, guys, I might try to sell it a little bit. This is midterm swing. If something happens, okay, that euro dollar gets bullish, I would definitely sell here 0.750 with stop loss 200 pips going for more than 400 pips on midterm swing. Yes, Martin. This is now new one if this happens because it's Wednesday now. Session recap trade, Martin, was valid until today. So I will explain once more. My webinars on Monday and trades that I give you on Monday are valid for Monday, Tuesday, and early Wednesday. Because we have live trading webinars each Wednesday, okay, I'm giving you new setups. So this is new setup for euro dollar. Yes, it changed, of course. So definitely, you know, I'm just a little bit careful about this Fed because on Friday, guys, we saw a fake out. Price actually collected all stops. Remember, guys, NFP, it collected all stops. I will show you the analysis. And then it dropped. And I said we should go short no matter what. I was sure that euro dollar will drop. Although it went a little bit above my POC zone and then it dropped. Here. This was NFP preview. And what happened? The price went up. It went to my, where I said I would short, but it went up, collected some intraday weak stops, and then it dropped. That is why I was telling you on session recap on Monday, we can sell these guys. And if you sold it, you would have made 50, 60 pips. It's not bad, guys, considering that the market was ranging. And euro dollar was very good trade from our previous session recap. So we made like 50, 60 pips. Yes, Angel is saying yesterday he made 50 pips. So you see, guys, people are making money with this, okay? So that is why I'm always saying open the account with Admiral Markets, guys, and trade here with me, okay? Okay, I'm also a trader, and that is why I'm giving you the opportunity to enjoy this and, okay, and trade along with me my Monday setups and setups on Wednesday live trading. Is this inverted head and shoulders? This can be inverted head and shoulders, but this is, you see, I think this looks like a zigzag to me. A, B, C, D, zigzag. It's making a zigzag pattern here. And you see, it was a big uptrend. Okay, so I think it needs to correct a little bit more here around L4. This is what I also see. Definitely. So let's see. I mean, I'm short. I'm in the trade. For me, this is a bigger correction on Australian dollar. So on 4 hour, this is a downtrend. Although, if this is indeed bullish, let's say, but it's not looking like a bullish inverted head and shoulders, because watch this huge drop here. Then this level will reject it again. If not, it should be broken. So let's see what will happen. Agils also sold it. Well done. I was telling you guys euro dollar was and should go down definitely. So yeah, I mean, it was good one. So let's get back to our euro dollar here. I am paying attention, guys, to this. So if you want to trade euro dollar again, I suggest, guys, that you wait for FOMC. Okay, you need to wait for FOMC. You see this pattern here? This is called 5-0 pattern, But you see, the problem is the retracement from the point D was not that big, only 18 pips. And it continued to drop. So if we move on to 4-hour time frame, again, here, you will see this was a good pattern that proved to be very, very good. But yet again, guys, if this is high and this is low, which it is, everything below here now is consolidation in downtrend. This is the top, this is the low. Now the price is correcting. You can just enter Fibonacci. So this is downtrend on euro dollar. But you see, there is still room to the more upside because this is downtrend. Okay? And I don't like when price respects my entries and trades after hitting stop loss. And that can happen with high risk events such as Fed, ECB announcement, rate, whatever pair you trade, guys. Remember, central banks and chiefs of central banks have the most impact on Forex market. Because when they speak, when they make announcement, when the board makes announcement, like Fed board or ECB, members of Fed, of ECB board, of Australian Reserve Bank, Bank of Japan, Public Bank of China, it doesn't matter, guys. All those institutions are at the top of the food chain in Forex market. And you need to be very careful when you trade them. Very careful. So that is why sometimes we need to have a big stop loss just to make sure that nothing will happen. JP is asking me, is Dutch election now neutral? Yes, I think so. I think German elections will be more important, and that is what we will cover. Definitely we will make a blog, so you will see it on Twitter, and definitely we will make a blog post on Twitter. All these important world events will be covered by me and Chris, and that is important. Dutch elections should not have a big impact on Forex market because definitely today is, I mean, guys, it's Fed decision. There will be a lot of traders who will try to pull out what Fed will do in next couple of months, and that is the news of the day. So Fed decision is very important. Now, if we zoom into 1 hour time frame, here, 1 hour time frame, you see, guys, that is why I'm saying again 0.670 is strong. It's top of ATR projection, H5 resistance is here, and now CCI is trying to get into overbought territory. Okay, so comparing two time frames, 4 hour is bearish, 1 hour is bullish. Well, slightly bullish. So we want to short into the confluence here and try to see what might happen. This was, you see, master candle, 1, 2, 3, 4, and master candle breakout here was good for some only 12 pips, okay, before it went back into consolidation. Then it went strongly to the downside. So it's trying to get into this master candle consolidation once more, but if we see a spike, then we will have more room to this consolidation level here. Some people were asking me, can we short euro dollar now? Well, guys, that is what I'm saying. No, because the levels are not very clear here. I mean, levels are clear, but the intraday levels are, you don't have room to support. You see, this is master candle consolidation. So if you short it now, the chance is that you will get nothing. You see now it's bullish candle. That is why we need to short it a little bit higher. My Australian dollar market order has been made at 75.96. Stop loss is 76.53. Very low risk trade, and my TP is here. Let's see what will happen. Angel, send me an email, please, so I will answer the question. Here, okay, the price is being in some sort of retracement to the upside, but as I say, guys, Fed is risky event. If you remember, Australian dollars we see from 2 weeks ago, market order was very good, but we didn't have a Fed now. Now it's Fed, so anything can happen. But I also want you to see that I'm totally relaxed, guys, when I trade low risk trades, and definitely don't be afraid to take low risk trades before the event. If you're in profit, take your profit. If you see that you can do anything, either wait for a stop loss or some bigger profit during the event if you're trapped in a trade. But you should respect your stop loss. Definitely, guys, respect your stop loss. Now, just because of Fed, I will not do any more orders, market orders, except for some these orders that I already told you. So watch for these, guys. Watch for these levels here on Fed. Maybe if you want to trade it, you could make something out of it. I will see what they will come up with. I will see the statement, and then I will decide whether I will sell here, but I will sell here definitely, whatever happens. Okay? And I will make a pending order if something happens, well, unexpectedly, and that euro dollar spikes to the upside. I will be making, well, I am thinking about, this is really, for me, trade that could be very, very good. So 0.15, okay. Pending order, guys, at 1.0750. Stop loss 200 pips, but then if it goes in profits, guys, it should be huge. This is supposed to be a swing trade, guys, on higher time frames. You can even watch it on daily time frame. We need to change Camarilla. For that, I will do it right now. So Camarilla indicator. Okay. Let me just give you. Okay. Oh, sorry. Yeah. Now, just give me a few seconds. Okay, and I will show you this pivot point. This is Camarilla here, daily. We will switch to weekly pivot point here. Pull Fibonacci on daily time frame, guys, and you will see, okay, you will see these levels. You see? Now, if we pull Fibonacci from the top to the bottom, you will see that these levels correspond to bigger movement. But also, guys, weekly Camarilla points are way below these swings. The top weekly Camarilla is here. So I don't expect that if, just follow me, guys. Just follow me. If you see that Camarilla levels weekly are way lower than the full swing here, you need to know that this level will hardly break. So this level now is strongest from daily perspective, 0.850. That is why I made a short euro dollar order on session recap. 0.850 is weekly Camarilla point. Okay? And now what you need to know, this level here is where we will sell. So I just made my stop loss slightly higher because I don't want that Fed spikes me out. I don't want Fed to spike me out. So that is why I made the stop loss slightly higher. I mean, it's slightly, but still enough. Okay. Here, guys, again, we are also here in a short trade. Okay. Australian dollar already initiated. It's been in a slight drawdown now, but as I say, it will be ranging. I expected this. Okay. So here you can see. So this is now, guys, what I'm looking at. Daily potential short. Okay, I need to move some of the fibs because it looks way. Let's see. And another fib, and I will make it again. Okay. Okay. So that's it. So we can go with Fibonacci here. We will switch color. Okay, of this fib. Let's see where it is. Edit. We will use different color. We will use blue. Okay, and here again, guys, we will insert another fib. Here. So you see, this is so-called dub fib confluence. We have covered it in our price action training school. So you see, here we also have very strong confluence. So I really don't think that even if something unexpectedly happens, like Fed will not hike rates this time, if it happens, this could spike to 750 based on my daily analysis, and here 78.6 H4 also previous top. If this is W pattern, it might fail. So this is 1 2 3. You see, this is, for me, this is the strongest resistance. But here on H4 we also have very big intraday resistance. So that is why I said I would short here. I don't think it will break, but if it breaks, it will collect some stops, and I don't think it will hit stop loss. Okay, I don't think really that it will hit stop loss. So from my perspective, if I see that 0.750 is initiated, from my perspective, it's low risk trade. But as I say, let's see for the Fed. I don't think that anything big will happen before the Fed decision, guys. So this is everything I had to tell you today. So I made 2 pending orders for this session. Sell limit on euro dollar 0.750, guys. Okay, this would be a bigger swing if it happens towards 0.3. Maybe it will take months, but guys, this is a big swing trade. Then I have still a pending order, okay, on dollar yen, and I removed this, but I still see this as valid. So now this is new pending order at the same place where we had it for the previous week. And of course, this is Australian dollar trade, guys. That is market order. Now currently I'm at break even. So here you can see break even currently, but I'm keeping this trade. I really am keeping this trade. Ilya is asking why break even. Ilya, you are late, but I was in a trade. I sold Australian dollar. I will not close my trade, Ilya. I just sold Australian dollar at the beginning of this webinar. I made a market order. Yeah, so now the price is at break even. But what I can do is I will wait for the Fed. If I am in a drawdown, I will keep my stop loss. If I see that price is in profit, I will protect my profits, taking full profits. Well, guys, Ilya, you're not getting it. How I do. Let's say I will explain once more, so I guess that you all will be clear with this. If you have 5, 6 different accounts, you need to have one big account, and when you make profits for your year, you stop trading. So if you have 50, 60, $100,000 and you made 20% on it, my advice is to stop trading the big account. Because in my career, I have learned the more I trade the bigger account, the less I'm exposed to a gambler psychology, and I might try to use some trades with bigger leverage to cover up because the account is big. Well, guys, I stopped doing that, and from that purpose, when you see a big account and when you have the big account, you can always ask me for a statement if you need to see how I traded my big account. Just send me an email and I can show you a statement, no problem. So you will see how I trade big accounts. Once I make my yearly target, that is like 20 to 30% on a big account, I stop trading that account and I open smaller accounts, and I'm trying to make double, triple, quadruple profits from small accounts. That gives me that passion to trade more, because the accounts are small. I'm not, you can do, guys, also bigger leverage and so on. But for bigger accounts, you need to trade it like banks. That's the problem with people who lose 50K, 100K in couple of months. And I know a lot of full-time traders who have lost more than $200,000 in a year or in 6 months because they thought that the bigger account they have, they will have bigger margin. That is wrong. I also worked with UK company back in days as a head trader. And what I learned from their risk department is when profits are made, you stop trading that account and you switch to lower accounts. You can trade lower, but bigger accounts should be kept as a savings or something like credit account if anything bad happens to your smaller accounts. So you need, guys, definitely to understand that holy grail is money management, guys. Yeah. Ilya is saying he put tarantula net on Australian dollar. Okay, great. I might add some trades, but definitely nice. Thanks, Ilya. This is really, yes, we will see what will happen with the Fed, but yeah, definitely. So guys, that was it. I mean, that's all I had to say. One market order for this webinar. We have Australian dollar sell trade. This is limit order. This is limit order here. So let's see what we will have. You see, market is not moving, and I'm still waiting for this Australian dollar to develop. But I don't really think that it will develop a lot before Fed. It just happened that we have a live trading session when Fed will announce their rate hike probably. Okay, Harshana is saying he sent a couple of mails, but I didn't get a reply. Please send an email now, so I will reply to your emails and send indicators if you need it. Just send it right away, because when I finish with webinar, I will check my email. Carlo is asking, if Fed goes 1% and face a 3 to 4 late hikes, do you think dollar can go a lot? Is it priced in? Carlo, I don't know really. We need to see. I think some of the price has already been priced in the market, but definitely we want to wait and see. Okay? Please be patient, and I will give my thoughts very soon. I need to see what they will come up with. Really. Yama is saying, great session as always, listening from Toronto, Canada. Hi to Toronto and Canada. Very nice. I like that people from there are listening to us really across the ocean. So excellent. Mikhail is saying, have a fantastic day. Guys, you too. Let's see what will happen. Monday, new trading session. Tomorrow, educational webinar with Chris. Follow the analysis, guys, and wait to see what will happen. Dollar CAD yesterday, just quick update. Dollar CAD went up 40 pips yesterday. Now, as you see, Fed it's still in POC zone, but I won't be trading dollar CAD now because yesterday I already closed my trade for 30 pips of profit. I didn't get full profit because I made a profit stop. So, well, 30 pips, I'm okay. I still hope that this Australian dollar trade will get us somewhere. It's currently at my entry, so let's see. Guys, thank you. We'll talk to you soon, guys. And as always, guys, cheers and trade safe.